What if I told you the US government just broke one of Wall Street's unwritten rules? What if I told you Washington isn't just regulating tech anymore? It's actually buying it. This is Robert. You're watching Tell the Facts. Facts only. No fluff. Let's get into it. Guys, that's exactly what happened. The Trump administration just took a stake in Intel. Not a rumor, not a bailout, an actual investment. And trust me, this isn't just about one company. This is about power, politics, and the future of America's tech dominance. So here's the million-dollar question: why Intel? Why not NVIDIA, AMD, or some hot AI startup? First reason, national security. Chips are basically the oil of the 21st century. No chips, no iPhones, no Teslas, no AI. By taking a stake in Intel, the government is basically saying, we control the supply line. We've got America's back. That's leverage, that's power. Second, tech sovereignty. The US and China are locked in a full-blown tech war. Washington can't just sit on the sidelines. Backing Intel sends a clear message to the world: we rebuilding America's chip industry, and we're taking back the driver's seat. It's not just an investment, it's a declaration. And third, never forget politics. Trump knows how to play the crowd. Nothing says America first louder than pumping money into U.S. manufacturing. He's telling voters, look, I'm not just fighting trade wars, I'm protecting America's future tech. That's jobs, that's pride, that's votes. One move, 3 wins. Why Wall Street went crazy. Guys, let us break down why the entire market just lit up like a Christmas tree after this Intel news. When the U.S. government itself puts money on the table, investors read it as a giant green light. It is not just Intel getting support, it is the entire semiconductor sector getting a national security stamp of approval. And confidence is the most expensive currency on Wall Street. Now let's look at the indexes one by one. Sure, Intel's not even in the Dow anymore, but who is? Microsoft, Apple, and NVIDIA, 3 of the biggest tech heavyweights on the planet. Microsoft alone makes up around 6% of the Dow, Apple about 3%, and NVIDIA recently crossed the $3 trillion market cap mark. The moment chips got that government blessing, investors instantly thought, if semis are safe, big tech is safe. Boom. Dow spikes almost 2% in a single session, one of its best days this year. Here the logic is even more direct. Tech and semis dominate the NASDAQ. Companies like NVIDIA, AMD, and Broadcom aren't just players, they're giants. In fact, semiconductors make up roughly 15% of the NASDAQ 100's total weight. So when Intel gets government backing, investors don't just buy Intel, they pile into the entire chip sector. That's why the NASDAQ ripped 1.88% today, with chip stocks leading the charge. This index is broader. It's basically America's stock market thermometer. When risk appetite jumps, money flows not just into chips, but into everything from banks to airlines. The S&P 500, covering 500 companies across 11 sectors, naturally followed the tide and climbed nearly 2%. Think of it like a ripple effect. Government money boosts chips, chips boost tech, tech boosts the whole market. In simple terms, the Dow popped because big tech caught the wave. The NASDAQ exploded because chips are the wave. And the S&P 500 rose because when investors feel safe, they buy everything. Indexes popping is just the headline, guys. The real story? This Intel move could set off a chain reaction. Chips, AI, even defense stocks. Let's connect the dots. Intel is now the chosen one, basically the policy-backed captain of Team USA chips. But on Wall Street, money doesn't just sit in one stock, it rotates. So you saw names like AMD, Micron, and even Taiwan's TSMC react. For context, semiconductors make up roughly 6% of the S&P 500's total weight. When confidence flows in, it pulls up the whole sector. Think of it as a rising tide. Intel gets the headline, but AMD and Micron get the liquidity. Then comes the broader tech sector. Remember, chips aren't the end product, they're the engine. AI, cloud computing, autonomous driving, none of that happens without semiconductors. When investors see Washington backing Intel, they immediately connect the dots. Does this mean NVIDIA gets even more demand for AI GPUs? Does Tesla benefit since self-driving chips are mission-critical? What about Google, Microsoft, Amazon? Are their cloud servers going to get cheaper, faster chips? That's why tech megacaps rally in sync. It's not just sentiment, it's fundamental logic. And don't overlook defense and infrastructure. Chips aren't only in your iPhone. They're in fighter jets, satellites, and missile systems. Without advanced semiconductors, the Pentagon can't run 21st century warfare. So when the government openly backs Intel, the market starts betting that U.S. defense contractors, think Lockheed Martin, Raytheon, Northrop Grumman, might see a trickle-down benefit. Even infrastructure names tied to chip fabs like construction and equipment suppliers could ride the wave. So in plain English, Intel is the match, but the fire spreads across semis, big tech, and even defense. That is why this story isn't just about one stock. It is about an entire ecosystem lighting up. Winners and losers. Who really takes the crown? So we just talked about how this one move from Washington sends shockwaves across the entire supply chain. But let's get real. When the dust settles, not every company walks away a winner. Some get the full spotlight, others only catch the side glow, and a few might even feel the squeeze. Here's the breakdown. Intel, the chosen one. No debate here. Intel just went from being the laggard of U.S. chips to the official face of America's semiconductor policy. Remember, this is a company that's been losing ground to NVIDIA and TSMC for years. Its market share in advanced process nodes, barely 10% compared to TSMC's 60% plus dominance. But now, with Uncle Sam writing checks, Intel has something its rivals don't: political protection. Wall Street reads that as a floor under the stock. No matter how much Intel's execution struggles, the government's backing gives it a brand new identity, too strategic to fail. NVIDIA and AMD, riding the wave. They're not the main characters in this story, but don't underestimate spillover. NVIDIA is already the undisputed AI chip king, controlling roughly 80% of the AI GPU market. AMD has been clawing back share in CPUs and data centers. If Intel gets fresh funding and capacity, investors instantly think demand for semis overall is going up. That perception alone pulls capital into the whole sector. So yeah, Intel eats the steak, but NVIDIA and AMD are definitely getting the side dishes. TSMC, the quiet loser. Now here's the flip side. Taiwan's TSMC is the global foundry leader, no question. Its 3-nanometer process is years ahead of Intel's roadmap. But remember Washington's playbook. Bring chip making back home. Every dollar that goes into Intel is, in theory, one less dollar going to offshore fabs. Investors know this. That's why TSMC stock could actually face pressure, not because it's weak, but because it's not made in America. Policy winds matter as much as tech leadership. Micron, Broadcom, Qualcomm, the ecosystem players. They're not in the headlines, but they're part of the chain. Micron leads in U.S. memory chips, Broadcom sits on networking and custom silicon, Qualcomm dominates smartphone processors. Collectively, these guys represent tens of billions in revenue and employ thousands in the U.S. economy. When money rotates into semis, some of it inevitably lands here. Think of them as the supporting cast. They may not own the spotlight, but they still get paid when the show sells out. Bottom line, Intel is the clear policy kingmaker. NVIDIA and AMD enjoy the halo. TSMC risks being sidelined, and the ecosystem names quietly collect their share. This isn't just a stock rally, it's a reshuffling of power, a new pecking order in the global chip game. Now, before we all start screaming, new bull market, let's pump the brakes for a second, because every big rally has its shadows. First, political risk. Government money sounds like protection, but too much intervention can backfire. Antitrust debates, international pushback, especially with China, could flare up fast. Second, the industry cycle. Chips are still working through an inventory glut. Policy can light a fire under stock prices. But if real demand doesn't show up, earnings might not keep pace. And third, overheated sentiment. Right now, everyone's chasing the trade. If the next round of earnings disappoints, this euphoria could flip into a brutal sell-off. In short, yes, the upside is massive, but don't forget, Wall Street always hides a trap or two. So yeah, risks are real. Politics, cycles, and hype can all turn this party upside down. But here's the bigger question. What happens next? Does this government-backed Intel story mark the start of a new supercycle, or is it just a short-lived sugar high for Wall Street? Let's look ahead. All right, here's where it gets interesting. Everyone's asking the same question right now. Is this the start of something bigger, or just a one-week wonder? With Washington officially backing Intel, sentiment is on fire. Hedge funds, retail traders, even pension money are piling into semis. The Nasdaq could easily tack on another 5–7% in the next few weeks if this narrative holds. It's the classic "don't fight the tape" moment. Government money can buy time, but it can't buy flawless execution. Intel still has to prove it can close the gap with TSMC in advanced nodes, and that's not a one-quarter story. If earnings in Q4 or early 2026 miss expectations, you'll see volatility return. If the U.S. truly doubles down on chip sovereignty, we could be staring at a whole new semiconductor map by 2030. Intel regains relevance, U.S. fabs gain scale, and global supply chains tilt westward. But don't forget, the other side of the Pacific won't just sit still. China will accelerate self-reliance, and Taiwan's role gets even more complicated. Bottom line, in the next month, this is bullish fuel. In the next year, it's all about execution. In the next decade, it could redefine who controls the world's most valuable resource, semiconductors. So here's where we stand. The market just got its biggest shock in years. Washington stepping into the chip war with Intel as the chosen flag bearer. Wall Street loves it. Indexes are flying, and semis are the hottest ticket in town. But let's be real. Every opportunity comes with a shadow. The winners are clear, the money is flowing, but hype can flip to heartbreak overnight. That's why the smart move isn't chasing headlines. It's scaling in, watching earnings, and keeping one eye locked on policy. Because the truth is, this isn't just about one stock, or even one sector. This is about the future of technology, national security, and global power. And here's the core test for us as investors. Do we see this as just another rally to trade, or do we recognize it as the beginning of a much bigger shift? Remember, anyone can ride a wave, but only the ones with vision end up owning the ocean. If you're finding value in this breakdown, make sure to hit that like button and subscribe so you don't miss the next big market move. That's all for now. Thanks for watching, and I'll see you in the next one.